You are listening to Revealing Real Estate Podcast, where we dive into getting over your fear of taking risk in real estate and making money while you sleep. I'm Nick Oppedisano, your host and real estate guru with over 20 years of experience. It's time to get real. All right, welcome back to Revealing Real Estate. We are on the second edition, or let's call it part two, with Andrew Morrissey from North to South Realty. Andrew, welcome back to the show.
Thank you. It was a pleasure the first time, and I'm looking forward to this time, the sequel.
Yeah, we had one. we chopped you up. It was a great podcast. The viewership has done great. I think we've hit, from our perspective, 50,000 views. From being a small podcast, it's been pretty good. So for us, that's going viral.
Let's make this one go even more.
Yeah, and there was a lot of interesting topics that we talked about in part one. We're going to break down part two just to kind of compare. For those that don't know and missed part one, go back and listen to it on Spotify or Apple iTunes, and you can listen to the full part one podcast of me and Andrew talking about the comparison between the Florida real estate market and the Toronto market. There's been a lot of stuff that's currently happening right now overseas with our American counterparts, and in regards to the Toronto real estate market. Here in Toronto, I'll speak on that behalf right now, Andrew, is we as you will know, we've seen a huge surge of inventory. Breaking it all down, we've probably seen maybe 30,000 between condominiums and freeholds available for a buyer to choose from. And those are 30,000 units across the GTA, which we haven't seen that kind of inventory all the way back from even 20 years ago. These are really scary numbers. We've definitely transitioned more into a buyer's market. Out of that 30,000, I would say 15,000 of those units are condominiums. The other 15,000 are residential freehold. We are noticing that specifically under $2 million right now, product is moving on the freehold side of things. And what I mean by that is, out of the 15,000, I would say 50 to 60% of those freeholds are overpriced. So there is still a huge demand for the freehold product. When we see new development construction-wise, and I'll go to the condominium side of things, we're looking at 15,000 available units condominium-wise throughout the GTA, and I'm hearing projected numbers rising to about 40,000 units of availability that developers are holding on to because people have not closed on or couldn't close and walking away from their deposits, and there's all this vacancy that's still going to get put out to the market. And then there's still some cranes out there in the city of Toronto right now, and we're going to see those numbers really start to dramatically climb. And I feel like this is going to be a process where it's going to take us 3 to 4 years to actually chew up some of that inventory. Some economists like Benjamin Tal from CIBC, he's saying that it's going to probably take about 2 years, and by the time you get that inventory to get chewed up within the market, and then they relaunch sales again, by the time they're actually to be able to put a shovel in the ground, it's going to be another 2 more years through that process. Freehold product right now from new construction, developer-wise, new homes are still sitting. Where they're still trying to sell townhouses here in Vaughan for about $1.4 million for a 2-car garage townhouse, which to me right now is absurd, because you can get a better bang for your buck if you buy onto the resale market.
Absolutely.
Where I can get a townhouse today for a client for $1.2 million. So what's happening and what we're seeing within the market is a big problem. And I think a lot of people were now waiting for this election to take place. Mark Carney has now won the election. We have the Liberals with a minority government. And there's a lot of pissed off conservatives right now that wanted some change. How do you think that bodes well for the Toronto market? And as well, can you see people wanting to move out and move their money out of the Canadian market itself because of the outcome of the election, and maybe move it more towards the Florida market itself or to our American counterparts?
Here's the scary part that I've noticed, and again, this is my personal experience and my company's experience transitioning our business down to Florida, also doing Ontario. I'm getting, like, when the election happened, the next day, my phone literally got bombarded with people basically telling me they want out. You know, this election was supposed to be a hope for change, and I think we just got the same old thing. The scary part, which is left still to the unknown, is the Liberals are 3 seats away from a majority. Will they merge with the NDP? Will they bring over some of the MPs from the NDP off to the Liberal side? If that happens, I think we're going to be treading into some really, really scary territory. And I do think we're going to see a mass exodus of wealth leave Canada, specifically Ontario. Speaking to very good friends of mine that run multi-million-dollar companies in the construction field, they're seeing a lot of development shut down, and builders are calling them saying we're shutting it down. And then on the flip side, I hear a lot of these builders transitioning their book of business down south, whether that's Florida, which again, a lot of the newer developers that are leaving Canada going to the US, they're not getting into Florida right off the hop because the prices are a little bit more on the expensive side, but the Carolinas are really big. And I hear a lot of big Canadian developers are transitioning their business down to the Carolinas. And that's scary for Canada and for Ontario and for the GTA, because from the numbers that I was reading, I believe real estate, whether that's realtors, mortgage lenders, construction, is about 40% of the Ontario economy. If you lose that, you lose like the major bloodline, the blood vessel that pumps to the heart of the Ontario economy. And that's the scary part. And what we're noticing in Florida, on my end, is I'm getting a ton of people who, you know, net worths anywhere between $1 to $5 million, nothing, not too wealthy, but upper middle class, are transitioning their wealth and their investments down to Florida because of what's happening. And they don't see a potential in growth in the GTA in Ontario anymore like they did maybe even 5 years ago or 7 years ago, when we were, you know, treading in the wrong direction, but it wasn't where it's at today. And I think, unfortunately, Canadians right now, and that includes us, even though we did transition our business to Florida, you know, you still want to see Ontario flourish, you still want to see Canada flourish, but we don't see that. And again, time will tell, but I am worried that a lot of the wealth and a lot of the money is going to leave Ontario and flow down south, whether that's Florida, the Carolinas, Texas, Arizona, we don't know. But I do see a lot of money leaving.
Well, give us an update from part 1 episode of the Florida market right now. Is what's it like out there? How's inventory? Are things moving? Are you still seeing things really continue to rise based on the inventory side and not many buyers out there? 1, and 2, are snowbirds right now still looking to get their products off the market right now? So
I interesting, going back to that. So I was actually interviewed by a news station because they reached out to me knowing that I do Florida and Ontario, and they basically asked me, they said, are Canadians selling their properties down in Florida because of Trump and the tariffs and everything? And then when I went into a little bit more detail regarding the Canadian dollar, the poor Liberal government managing our Canadian dollar, tanking to almost 40% of what the US dollar is worth, 60% of what the US dollar is worth, they didn't like that. They didn't like that different angle that I had, and they just wanted to blame Trump and tariffs and all that stuff, when that's maybe 10% of the sellers. But I would say the majority of people are just capitalizing on the Canadian dollar. They're older. A lot of the snowbirds that we're dealing with, they're in their late 70s, early 80s, and they're like, we've been to Florida for the last 20 years. We want to liquidate. Now's a good time for them to liquidate because, like I said, $150,000 condos, a $200,000 Canadian transfer over. So they're making a lot of money there. So I think that's where we see things. The inventory is pretty much steady. You know, there are sales are down. You know, you see all the news and everything. Sales are down in Florida, but we're only talking a couple of percentage points here. We're not talking.
Not big. Yeah.
It's not like a 40 or 50% decrease in sales. We're talking in Miami, it's almost, I think, 2.7% sales are down. Now, if you're comparing it to Tampa's down 6.5 or 7%. So very different markets. Again, it's very micro markets. We have to look at what Miami market's doing, what the Broward County market's doing, what's Palm Beach, Naples. But sales are down, but we're not talking numbers where the sky is falling. It's normal. Plus, we're getting into the summer months, so it's usually a little bit quieter down in Florida.
So a lot of stuff is happening here within Toronto, as you can see with the inventory. And I'll give you some real experiences that are taking place. You know, for instance, I got a condo right now listed down at 33 Blue Jay Way down at the Bisha Towers. These things were averaging anywhere about $1,400, $1,300 a foot at one point in time. We're currently listed for about just over $1,000 a foot. Can't get a showing inside, which is a great price now, right? We can see that condominium price points have dropped $300 to $400 a foot, which is a big number. can't get a showing inside the condos too as well, because it just you're so, you're put into this huge pile of inventory right now, and it's hard to stand out. Second, I have another one down in Markham, by 23 Cox. We have a unit there, 1,650 square feet. These things were selling at 1.5 million dollars. Currently down at $1,199,000. We're getting a showing every 10 days. So what we're seeing right now is that we're price points, and we can't even catch up to how sales are actually, or values actually dropping, or how rapidly it's dropping right now. Are you seeing the same things on your end in regards to your team and what's happening within the market?
Yeah, like even me, I got a condo in Woodbridge Avenue for sale down in, and it's about 1,300 square feet. It's one of the larger units in the building. The penthouse sold last year for $1,350,000, and the penthouse was fully renovated. We weren't, but we priced it at $1,179,000, and we got showings. Had an offer. The offer fell through, but we had showings. But ever since then, now the last 3 months, we repriced it at $1,099,000, which is unheard of for that building, and we're under almost $900 a foot there, and we can't even get a showing. So it's really scary, and I think too the larger condo market, anything over 1,000 square feet, I think the reason why those are kind of stalling too is because sellers aren't getting what they want when they're selling their homes. You got a 3,000, 4,000 square foot house. You want what you were asking before, 2.4, 2.5 million. You're at 2.1, 2.2, and some of the sellers are still unrealistic. Like we were going at half of the inventory is probably overpriced. Mm-hmm. So I think once we start to see those listings and start to sell, I think the higher end condo market will start to pick up, which hopefully will push the lower end condo market to start picking up as well. But there's so many unknown variables, and this all ties down, in my opinion, to politics and confidence. And I think once you elect the same old thing, I don't think we're going to have a spurt of confidence for a long time.
But I've been finding since the election is over and now put behind us, calls have been actually starting to pick up quite a bit. We're getting more showings on now our listings. And agents are actually calling and talking offers, which was not the same prior to the election taking place, because I think of all the uncertainty, and people just didn't know what direction our government was going to take. I do believe that if Trump didn't come out and announce these tariffs, the economy, the Canadian economy, wouldn't be as bad as it is currently right now. Do you find, are you finding the same thing on your end after the election, that you're finding a little bit more surge or calls that are coming in regards to your listings, and our offers starting to trickle in a little bit more?
Yeah, so we're getting some calls. Again, depending on the type of inventory we're looking at, right? But definitely, I think now that the election is over, not to say that there's some confidence, but I think there's some now, okay, that's done. We can put that aside and let's focus on our business. And I think that's where people are, and plus the market, the weather, it's all, I think it all ties into it. So yeah, definitely starting to pick up. We've just last week we had 5 sales come through the office, which is great, which is, that's a really good week for us. Yep. So I think we are going to start to see a market pick up, but in terms of, the dynamics of it and how long will this last, is this a blip or is this something that's going to continue through the spring and summer? I guess time will tell for all of us.
Yeah, and my prediction is this, for whatever it's worth, based on what I'm seeing within the market, I think condominiums are done for the next 2 to 3 years. I think you're going to be able to, even if you're a seller right now trying to sell it, I don't think that they're going to be moving too quickly. So right now, I think the option is for somebody who has one of these condominiums right now is hold on to them, and if they're currently rented out, work with your tenants right now to renegotiate rates. I had a tenant that I have a condo, within my portfolio, and the tenant called me up saying, "Hey, I'm willing to stay for another year." It's a 1-bedroom condo down at the Minto, down at King and Spadina area, and they're paying $2,400 a month in rent. And she sent me up. She goes, "Listen, I'm willing to stay on another 1-year term for you, but rates have come down on the rental market. Are we willing to, are you guys willing to come down on your rental rate?" And just as inflation starts to increase and we as landlords want to start increasing our rates, I think landlords really need to start adjusting to the new rental rates when it comes to renting out these condos, because there is a surge as well of availability when it comes to rentals. So you sit there and you renegotiate, and have that conversation with your tenants if you can to keep them into place. So we'll move aside the condominium side of things. Second thing is we talked about again, and I'll just kind of reiterate is new homes, specifically within New York region, and majority of more of these developing areas that are coming to the market. They can't adjust on price point. Right, I know that there was a lot of conservative policies that were going to be implemented if the Conservative Party ended up winning. One was the removal of HST under products of $1.3 million. I thought that was going to be a huge, significant change that we really needed to create some stimulation within the market. The capital gains tax, if you sold an investment property and then reinvested that into the market, was going to be a huge, significant factor because I thought maybe it's going to create more of an urgency and stimulate the market where people wouldn't be so afraid to now buy an investment property, and you get the investors back into play. Or if an investor wanted to make some moves within the market to sell something that they've been sitting on for some time, became very profitable on it, and maybe wanted to reinvest into a different sector or a different style of home. So I thought those were some really good positives. But unfortunately, right now, we're not going to see that change. And based on what the Liberals have been providing us for some time, and I don't want to get too political on this, and
that's the views, man. That's
but these are just we're just talking about what the facts are here.
Exactly.
And right now, with all the taxes that were implemented within our Canadian governments, basically controlled by the Liberal government for the past 4 terms now, I think this is a problem that we will continuously to see moving forward. And I think if the Liberals don't come in play to start putting some significant changes into their policies to help stimulate it one way or another, and they have to do this fast, or we're going to continue to see values continuously to drop quickly, month over month, year over year, I don't think we're going to see a real big change. Where I do see, confidence building right now is on the residential reside things under the $2 million range for sure. Because I do believe that the current inventory on the residential side of things is, yes, it's high, but if you removed 50% of the overpriced listings that are currently on the market, that's only going to leave us with, 7,000 freehold units to actually choose from for a buyer, which is not a lot. And there are buyers out there. We're finding that if we underlist these houses quite a bit, all of a sudden we get a big flux of buyers coming in. And a lot of them are still selling then into multiple offer scenarios. That's just kind of what I see for the next at least 12 months. I think things will start picking up even further for next year's spring of 2026 on the residential side of things too as well. But I also do believe that a lot of people will start moving their money outside the country because of the lack of confidence within our governments and for the amount of taxes that we're paying. And you understand the American market a little bit better than I do. In the United States, if an investor sold a property today, can they now reinvest that money tax-free into another property as long as it was invested in America at one point or another?
Yeah,
Do you know that?
The 1031 exchange.
The 1031
so that's
exchange.
something similar to what Pierre was trying to do in Canada and eliminate the red tape and cut the red tape, because that was another big... I think the red tape is a big factor in terms of the rebuilding the new development, because going back to what I was saying before, the developers are leaving now because, from the time they get a site to their desk to the time that they start to sell it, it's about 4 to 5 years, and they're in it for $4, $5,
That's a
$6
long
million.
time,
And then you got 2 years to sell it and another 3-4 years to build. So you're in the project for a 10-year lifespan, let's call it. And you're already $5 or $6 million into the project in red tape and just paying, services and fees and
all the bureaucracy involved in it.
Exactly.
Yeah.
Whereas they're telling me, they go, Andrew, in Carolina, Southern North Carolina, and Florida, it takes 8 to 9 months to get the approval. There's no red tape, very little money, and they start selling. And it's a 12-month market. Whereas here, the building is a little bit harder in the winter. There's a lot more things that they need to do. So that, I think, needs to change if we want to stimulate the market, the red tape. The 1031 exchange in the United States, where if you sell a $250,000 condo, as long as you buy something of equal or more value, you can reinvest it at a zero capital gains. There's some paperwork that needs to be done. But generally, as long as it's a like-kind exchange, they won't bother you for the taxes. And then you keep deferring the taxes, and that's what a lot of wealthy people do.
Was this in place for some time?
Wow.
Do you know?
I don't know how long it's been in place, but it's been in place since we've been around for the last few years. So I think it's been in place for a long time.
So do you find that for the listeners that are listening to the show right now that investing right now in Florida is a good market to invest in right now, or and like you said, there was Carolina, but you feel like pretty confident that if they had some liquid money or they decided to liquidate some of their investments here within Canada, to reinvest it into the States is a good move?
Absolutely, because you look at the whole entirety of the market and you look at where are the big corporations and the big companies putting their money. And I saw something in the news today where FC Barcelona, right, the Spanish football club, they have their head office or one of their headquarters in New York City. They're relocating to Miami. So where are all these multi-billion-dollar organizations going? They're all relocating down to Florida. The Carolinas is great as a starter for a lot of these developers because the price points are much cheaper and they can learn the process very easily at a lower investment cost. Mm-hmm. But regarding Florida, Florida will always be the Wall Street to the south. Whether they're considering that to be West Palm or Miami, it doesn't matter. South Florida in general is an area where a lot of people should be investing their money. Because for Floridians, yes, the prices are a lot more expensive than what they're used to. But for New Yorkers, from people from Ohio, Michigan, mm-hmm. It's very, very cheap. Torontonians, $1.5 million home or $1.5 million townhouse is $500,000 down in Hollywood. You know what I mean? So
it helps even on the conversion side of things. Then,
absolutely.
Because that was my next question for you is, the difference in conversion between, or the dollar value between American and Canadian. It costs Canadians a lot more to invest with our American counterparts because of the difference in our dollar.
Exactly. Like I got one of my agents, he's relocating. He's leaving he's been here forever, but he's done. He's finished and he's selling his house for $1.5 million. Going to go buy somewhere in Naples, even it's the east, a little bit on the east coast of Naples, but he's going to get the same house, 4,000 square foot house, pool, beautifully done on the inland, a little bit, about 35 minutes from the beach, probably for about $750,000 US. Detached, fully
wow.
Detached, 2-car garage, gorgeous home.
So it's costing you about $1 million Canadian.
$1 million Canadian. And that's on an extreme because a lot of people aren't getting into those.
And if I wanted to get closer to the beach, if you don't mind me asking?
If you, again, Naples is a little bit of a different animal. You're talking, upwards of, anywhere between $2 to $100 million, right? Depending on the location. So it's very different. But if you're on the East Coast, you can get a house right on the Intracoastal in Fort Lauderdale in Hollywood, $900,000. Beautiful bungalow, one level, 1,300 square feet. You got a 40, 50-foot boat dock. You're ready to rock and roll, man. You can't get that in Toronto.
Yeah. I remember early on, I've been in business for now probably, it's been about 20 years now. I think I licensed in 2004, so we're heading to 21 years. Our Canadian financial institution was probably very sought after, probably one of the top 5 worldwide in people really wanting to mimic what we're doing. Man, I think that number is really significantly dropped right now because the wealth, the upper middle class right now to more of the wealthier are really kind of frustrated right now from the consensus that I've been hearing from the people within, my circle. They're frustrated on the amount of taxes that they're paying. Canadians right now in their upper echelon of value or net worth are really complaining and they're really concerned because there's no incentive for them to want to work harder or want to work more. And investors don't want to really invest within our Canadian market when it comes to real estate. And we know that Toronto thrives all on real estate. If real estate is not moving right now, we will not have a market. We're looking at industrial buildings, people laying off. I know that there's a lot of people laying off 150 to 200 of their employees currently right now, and more to come. I speak to drywall companies. I'm speaking to electrician companies. I'm speaking to carpentry companies. There's no work out there. And unemployment right now is going to be close to 10%. And that's going to continue to rise. And I think there's going to be a bigger surge of inventory that's going to be coming out within the market because how are people without a job, without any income, going to be able to afford to be paying these mortgages? So my question to you is, in your predicament within these markets right now, is do you feel that this market is going to get worse before it gets better? Or do you think that there's that pot of gold at the end of the rainbow that can actually start taking place?
I'm going to get political now, and I think we thought we were at the bottom with the election coming, and we had some hope for change with the Conservative government. Now with more of the same, you know what I mean? You can change the driver, but this is still the same car, right? So I think we have a lot more down to go, unless
specifically on the condo market, though. I want people to understand that too.
Yes,
well. There's different segments. There's different parts of our markets.
There's a lot of developers too now that are offering credits.
Sorry, and I don't mean to cut you off, but we haven't even talked about the commercial industrial sector, right?
Yeah.
Land development wise. So
and it's crazy, right? It's getting. I think we're in for a little bit more of a hurt for the next 2 years, unless again policies and the policies change. That's number one. We got to see what policies this government now decides to implement, and whether or not they decide to
implement any, if
any at all, or have a merger with another party. If that happens, I think we're in for a really, really tough couple years. If it doesn't happen, I think there might be, I think we'll start skirting by. Maybe the market will pick up. But again, if unemployment is up, if construction is not building, if builders are leaving, like I've never heard of billion-dollar companies. Like, listen, multimillionaires will always be multimillionaires, regardless of government. Mm-hmm. They know where to invest their money. But here's the thing. If they're leaving and they're bringing their money and say, you know what, we're going to shut down Canada operations for now, for the next little while until things change, and we'll go down to the States, that's scary, because they're thinking, okay, the U.S. has a good market. We're going to make money there.
We'll diversify. We'll move our money
exactly.
elsewhere. Yeah.
And what is
look at Mattamy Homes. Mattamy Homes builds probably one of the largest builders here in Canada alone. And they also have a portfolio throughout the United States as well. They're huge.
They're huge, yeah. They have one little development. It's called Westlake, just north of West Palm, on the extreme west coast, close to the Everglades. It's called Westlake, and they develop. I think they're developing 2,000 or 3,000 houses there, and it's an amazing, beautiful development. But you can get a brand new house there for $400,000. We're talking single family, 1 story, 1,300 square foot bungalow in a community with multiple pools, with clubhouses, recreation, tennis, soccer, anything that you can imagine. So of course they're going to go to Florida. Of course they're going to go to the Carolinas.
Nice weather. You got an ocean.
That's right.
Maybe and they're probably paying a lot less tax than we are here as Canadians.
A lot more.
And what are you giving us here? There's no ocean. Our skies are pretty gray and gloomy. I don't want to sound all depressing and stuff like that. Yeah. Canada is a great country, or was. I was very patriotic at one point within my time frame. I just don't feel the same about my country anymore. I'm hoping that would change. I just don't feel that Canadians are getting a really good fair shake at things right now, and I think when you punish successful people or entrepreneurs wanting to make something of themselves versus other political parties,
yep.
I just don't think that it's something that I would attain. So
we just witnessed the greatest bamboozle in Canadian history.
Yeah. That's a good point. If somebody was now frustrated, and a Canadian now is thinking, and they had this thought process on leaving the country and moving to the States to go and start a new life, because of paying less taxes, what's the process for somebody to actually start diverting their funds over and reinvesting into the States for now?
Yeah, it's not quite just a knee-jerk reaction. I think there's got to be some planning involved too. It's
right.
Not like I want to just say, yeah, just bring the money over and we're good to go. There's some planning involved. There's some accounting involved. Remember, because the Canadian government will try to get their hands on any dollar that you have, whereas the United States government, it's similar but not quite to the extreme that the Canadian government is. So I think, reach out to someone like myself. We don't really get involved with the immigration side unless you're in the real estate business, but
mm-hmm.
we do offer immigration services. We do have a team of immigration experts, because my phone has been blowing up since the election. I probably had 50 phone calls of saying people that they want out.
Really? Eh?
Yeah, and I'm not talking like small. I'm talking like people who run 50, 100, 150 million dollar companies that are saying, you know what, I'm just tired of this. I can't continue like this. This is not the Canada that we started from. This is not the Canada my father came to, your father came to. This is not the same Canada.
Yeah.
And I think that needs to change, and I think the mentality needs to change. And like I said, I do think there is I think you should have a diversified portfolio, but if your plan is to leave Canada behind, the United States is going to be the single best investment you're ever going to make in your life. Whether it's in Florida or Texas, it doesn't really matter. But as long, I know clients who left Toronto to go to New York, and New York's an extremely high tax state, but it's New York City. It's a very different animal, right?
Right.
So there's a lot of benefits to the United States and to investing in the United States, whether that's real estate, stocks, alternatively getting a visa, moving your family out. There's so many options. Don't listen to the noise. Don't listen to the social media, the mainstream media about Trump. With their Trump is hard. We are at 100% success rate with our visa applications through Trump. So Trump hasn't affected our visa process. In the end, it's all about how you propose to the United States government the value that you're going to provide to them. And I think it's a very easy process if you're dealing with the right
How
people.
long does it normally take if you're going through that process?
We're getting approvals in 2 to 3 months. It's pretty quick.
That's quick.
Yeah, it's pretty quick. Now, if you're doing the process we're sponsoring you, so it's a little bit different with our company. But if you're one to just start, buy a new business or buy an existing business, it's anywhere between 6 months to a year. But we've circumvented that process to make it a 2 to 3 months.
So you have right now a process where you can get a Canadian realtor today to get licensed as well, let's say within Florida. So if I want to start trading in Florida and I want to get my license in Florida, you can help me through the process?
Yep, absolutely.
And what does that process look like then?
So one of the things, you come in for a meeting at the office, there is a criteria. It's not as simple as I'm just going to join you guys and we're going to get you to Florida. There is a criteria, there is a process, and there is we have to evaluate you and your abilities as well. So it's not just I want to move, I want to get out of here, and you're going to move. There's a process to it, because at the same time is I don't want to just throw somebody into the wolves like a deer in the headlights. They're going to go to Florida with no money, no clientele, nothing, and they're just going to be like, what do we do now, right? We need to sit down and talk, but it's definitely something that we helped a lot of realtors through. We helped over 10 already relocate, and a lot of them are relocating their families and leaving, unfortunately, Canada to move to the US for a better life. So it is something that we do provide, but it's very selective, and it's something that you would need to reach out to me personally to go through a criteria. But right now, we're looking at 3 months. You'll be stamped with a social security number and a US visa legally to work and live in the United States.
If anybody's looking for some Florida real estate, who knows? Maybe I just may get licensed now in Florida too as well. I'm pretty excited about that, which I think you're going to be doing a presentation for our team.
Absolutely.
In regards to that as well, and I think that'll be a wonderful opportunity. If I was a realtor right now and I was going to position myself to start trading and getting my license in Florida right now, what type of advice would you give me? Would you want me to start with the vacation homes? Would you want me to start selling more primary freehold homes? Would I start focusing on condominiums? Should I specialize in something? And let's talk about the Florida market, Miami, Orlando, all that stuff. Yeah.
I think for a Canadian realtor or Ontario licensed realtor, I think the number one...
We would dominate, by the way.
Absolutely.
We would kill it. I would go there, start a team, and do it all. I'm sure they're not as hustle and bustle as we are over here.
Absolutely not. It's an island mentality. They're already in their shorts with their
5 o'clock. It's happy hour.
Yeah, 3:30. Never mind
3:30. Yeah.
They start earlier than that.
Yeah, start at 10, finish at 3:30. That's it.
I had to call an agent 16 times. She had a showing at one of my listings, and one of my agents was there waiting for her, and she was 10 minutes late. I called her 16 times in a row.
My shit.
It's a month and a half. She still hasn't returned my phone call. So it's just different. You got it. Once you get through that, it's an amazing market to be in. Again, you feel different being down there. It's just the environment, the vibe, and everything. But if you bring our mentality down to Florida, you will be successful no matter what. But as a Canadian realtor, as a Canadian investor, because Canada has limited short-term rentals, and because there's so much criteria and so much red tape against short-term rentals in Canada, specifically Ontario, my suggestion would be to become a short-term rental expert, because there are properties down in Florida that you can purchase for about $800,000, $900,000 USD that will generate north of $200,000 in income. Right, that's a significant return. You're looking at about a 15-17% return. Now there are costs associated to it. You got to get licensing and all that, but our team helps you with all that. So we can take you from A to Z, and we can get that done for you. So I think short-term rentals is something that Canadian realtors should focus their time on, because the ROI, simply put like that, or multifamily.
Excellent. All right, Andrew. So let's step back a bit. I want to look at kind of the big picture of things. based on, and we talked a lot about, Canadian politics. We talked about American politics. We talked about leadership between the two countries. We talked about the Toronto market. We talked about the real estate, Florida market itself. What are you seeing right now for your forecast when it comes to the Florida market? Because I know you specialize that for the rest of 2025.
I think the rest of the year is going to be on the slower end because we're getting into the summer months, and it's generally a little bit slower. We're not noticing the slowdown because all our properties are in escrow currently. So, again, because of the mentality that we come to and we answer our phones and we know what we're doing, our properties aren't suffering. But there are a lot of properties down in South Florida that are suffering. And again, the new rules with the condo collapse, the Surfside collapse, the new legislation that is going to be implemented in 2026 that all condominiums need to now have reserve funds, which in Toronto and the GTA we're used to that, but in Florida they're not. I think we are going to see some changes, but there are some condos already blacklisted. So if you have a loan, conventional loan, a lot of lenders will not lend on those condos. So we are noticing that change. But I think overall, on a macro perspective, I think the South Florida market is poised for nothing but growth just because of the amount of investments that's going in. Short term, there will always be those blips here and there. Long term projection, politics is stable. Even if the politics isn't stable, nobody talks about politics in Florida. Democrats aren't against Republicans. Republicans aren't against Democrats. Everybody's just living their life and having a good time. So not a lot of people are too worried about the politics. Plus in the US, the state has a lot more control than the provinces in Canada. So even though the federal government does get involved, they only have certain things that they can get involved with. So I think Florida as a whole is a great place to put your money right now because of, again, if you go to places like the Dominican Republic, Cuba, those are places where the politics are very different and your money may not be protected. Aruba is a little bit different because it's a colony of the Netherlands. But places like the Dominican, places like Mexico, these are all places where we don't know where your banking is, how safe it is. But when you invest in the United States, when you invest in places like Florida, your money's protected, your money's safe, and it's going to be poised for growth because that's where everybody's investing their money.
Financing wise, if I was looking to get into the Florida market and I needed some financing, what are my options? Can I find a Canadian bank in Florida that would finance me here in Canada based on my income here?
Yeah, so TD and RBC are the two Canadian banks that do lend in Florida. I do not recommend as a Canadian utilizing them unless you're willing to open up your entire portfolio because they will use your Canadian income, your Canadian credit score, and your Canadian assets to approve you on a mortgage. But the United States has so many different loan options, and we have a phenomenal loan officer that we work with that can get Canadians approved with as little as 25% down. 30% is the magic number, but as little as 25% down. No credit, no income, no opening books. You don't need to do anything. The rates are around high 7s, low 8% right now, but you can get any property you want on a DSCR loan right now between 25 and 30% down in Florida and in the United States through our loan officer. So there are like the amount of programs that she has to offer, like I don't even know half of them because it's unbelievable what she can do with if each individual scenario. She could use your investment income, she could use your retirement income there. The US opens up to a lot more loan options versus the Canadian banks. The Canadian banks will still limit you and you'll open up your books and it'll be a lot more invasive than the American ones.
Yeah, and that's really great to hear, you know what I mean? When you're going to utilize the bank as your partner to get in there, what do you care about? 7-8% is the cost of doing business, and you get your returns on it. It's something that I really am considering to come over there and maybe look at a small little development site where I can start opening up a corporation on there and reinvest some of my Canadian dollars. It's a thought process that I got, and I've been having this conversation with some of my partners too. Is I'm looking to sell some rental income or some rental properties, taking in some of that cash and reinvesting into markets like Florida in the States where I can now start making American dollars, own an American corporation, and I pay less taxes on my profits too as well. And plus, I'm going to make an extra 40% on the dollar exchange too as well. So there is a lot of upside towards it, and having you on my side to help me through the process is just a bonus. So I think if people are looking, or our listeners are looking, and they want a little bit of diversion right now, and I'm sure there's a lot of people, as we talked about, thinking about getting into or diversifying their portfolios into different markets, reach out to Andrew, North to South Realty. They're located at 3560 Rutherford Road in Vaughan. Andrew, what's the best way to find you?
Just come by our office, give us a call. Our office line 416-697-1400 or our Florida line 954-533-3936. We're always available to answer any of the questions. We are that direct connection for our Canadians down in Florida, whether you want to buy or sell or just want advice in general. We are here and our door's always open.
Well, that's a wrap for part 2 of a Revealing Real Estate series with Andrew Morrissey from North to South Realty. We covered everything from post-election ripple effects to shifting buyer psychology and what to watch in months ahead. If you're thinking about cross-border real estate, whether it's investing, relocating, or retiring, Andrew, you're our guy and everybody's guy. So make sure you subscribe, leave us a review, and we'll catch you on the next Revealing Real Estate episode.
Thanks, Nick. It was fantastic, and I hope we'll make this a trilogy soon.
Yeah, definitely. Thanks for coming.
Thank you.
Appreciate it.
Looking to buy or sell? Call a team you can trust. Don't believe me? Our Google reviews say it all. Put us on your lawn, your house will be gone. TheOPteam.com.